All right. So, um, let's go over gold. 1 second. Okay. So, Sunday. All right. So, gold ended up opening up on Monday, right here, or Sunday, and then respecting the highs right here. Okay. So before that, you can see gold swept a bunch of lows. Okay. Some right here, inducing sellers into the market. And then finally taking out this low right here. Okay. So when gold took out this low right here, it induced a bunch of traders, right? And ultimately, they were all induced from this area right here. All right. So because they were induced from this whole area, now that I took out the low, we ultimately should have our eyes towards these highs right here because now there's liquidity there, right? So look at it in terms of SMC or other retail traders. Price ended up coming into their point of interest, their supply zone, or is that demand? I'm not really sure. And then after tapping into their point of interest, it had a sweep of the lows, right? Ultimately breaking that structure and inducing more sellers into the market, right? So let's say the people that missed out from here and scaling down to lower time frames, let's say the people that missed out or the people that want confirmations or whatever, they're looking for that break of structure, right? And what ends up happening is they get that break of structure right here, and then they look for shorts in every little POI. So you got one here. Some might find some here. And then you got one over here. Right? So ultimately, they're just trying to sell at those areas, thinking, okay, it's gonna continue going lower. So what ends up happening? Takes out the lows and then starts rallying to the upside. Now, having this BOS to the downside induces sellers and their liquidity is ultimately above here, right? Because you have to understand there's a bunch of different traders. I mean, there's a bunch of different um types of traders. There's some that are gonna scale to lower time frames over here, or I mean over here. And then there's ones that are ultimately entering here, keeping your stops above here, you know? And there's more that are entering here and keeping their stops above these highs. But ultimately, sellers were induced from this whole area right here. Okay. And that's the reason why we should our eyes should be towards longs to at least right here. All right. So Monday, price opens up right here. Let's go to the 15 minutes. Okay. So this right here is Sunday, market open. And then you have Monday right here. Okay. So Monday was basically just consolidations. And then at the end of the day, during Asia, the move ended up happening. Nevertheless, it was an all right move, to be honest. Unfortunately, it happened during Asia. So unless you take trades during Asia, you would have missed out. But yeah. Okay. So what ends up happening is the market comes into these highs, and then after coming into the highs, it sweeps the lows. All right. Now, our goal isn't really to catch the trade from this low right here. Okay. If there was a liquidity block, a clean liquidity block, which there was, but it's just your stop loss would be humongous. Nevertheless, if there was a clean liquidity block right here, somewhere here, then this would be an entry. However, there isn't. I mean, there is right here, but your stop loss would just be way too big for you to take the trade. But yeah, regardless, the market moves to the downside, taking out the lows, inducing sellers. Okay, so remember, price comes into their POI. Okay, comes right into their POI, and then it has a break of structure or a change of character, whatever they want to call it. So they get their change of character, their break of structure, or whatnot, and then all that happens is it induces sellers. Okay, and that's why you can see in this whole area, look how price kept consolidating, getting more sellers into the market, and then blasting to the highs. All right. So, after the market moves into this area right here, pushes away, you can see it had little miniature break of structure right here, inducing more sellers. And then you can see that little order flow or slowdown of price, whatever these SMC traders look for. And ultimately, market comes here, builds that liquidity. Okay. So the liquidity is being built above. You got that sweep of liquidity to the downside right there. Now, unfortunately, if you want to enter here, your stop loss would have to go below here. All right. So, what ends up happening is the market prints these lows on purpose after sweeping this one, and then finally comes, sweeps all this. I believe sweeps this as well. Let me check it out. Yeah, it does. Okay. So you can see the market respects this little low right here, right? Respects the low, and then finally sweeps that low, and then finally blasts to the upside. Okay. Coming for the liquidity above here and the liquidity above these highs as well. All right, so that was Monday. And then you get Tuesday, which is basically just continuations, right? Same thing over and over again. So yeah, you get Tuesday, which is right here. Okay, same thing, right? Remember, what I talked about. Sellers were ultimately induced from this whole area right here. Okay? So you shouldn't be expecting much much of a down move, because even though it took all these highs right here, took out that external high on the 4-hour time frame, but took nothing from the left, right? Because sellers were ultimately induced from this whole area. So all we're gonna get is miniature pullbacks, right? Taking out lows, inducing sellers, and then the run back up to the highs. So what ends up happening after taking out these highs on Tuesday is the same thing. All right, so on Tuesday, you can see the market took out this low right here, right? Inducing sellers into the market. And then what you see is that run up, causing that break of structure, inducing buyers there. And it comes for the lows again. Okay. So I talked about this many times. Ultimately, what we want to see is we want to see a buildup, right? So when the market ran to the lows from here, all it did was just go straight to the lows, right? Maybe stalled right here a little bit, but it wasn't much, right? And so what the market does is comes for the low right away. And that's why you get this buildup that occurs right here. Okay. Ultimately, we want to see the buildup, whether it's before or after taking out the low. We want to see that buildup before we can say, okay, yo, let's look for longs now. All right. So if the market built up, if the market had a build up before taking out the low, then it's an entire different story, right? It didn't have that. So that's why it had it here. Takes out the low, right? Takes out this low, and then finally starts moving to the upside. All right. So market sweeps the low, induces sellers. 1 second. Okay. So the market runs for the low, induces sellers, and then has this move up, takes out this high right here, inducing buyers, and then takes out the low, right? So now it's had that buildup. After having the buildup, starts moving to the upside. And after moving to the upside, you can see it does the exact same thing, right? Now, there isn't any possible entry for us to take right here. There's no liquidity block, okay? So that's why when the market moves higher, we have to look for that entry model, okay? And that's what we end up getting right here. All right, so market comes into these highs. Now you have to understand that because the market did this, this right here is a liquidity block. So we can ultimately see a move a bit lower, right? You can see some reactions from here and then move higher, okay? Also, it's an area where sellers are induced, okay? So we're going to see that sweep of the low, inducing more sellers, and then finally move to the upside. It's basically the same thing over and over again. Whatever happened on Monday, right here, same thing over and over again. So the market comes into the highs. comes into these highs, right? And then after coming into the highs, you can see it comes lower, respects the low, okay? Respects this low right here, and then finally comes and takes out the low. All right, so let's go to lower time frames. Looks a lot better on lower time frames. But yeah, what you end up seeing is same thing. Market first comes for this low and then moves to the upside, takes out this high. Okay, so now that took out the high, induces buyers as well. So not only buyers, but sellers are in the market as well. You got your sellers right here. And look at that. Respects it so many times, right? Inducing more sellers. You can also see a little sweep of this low right here, inducing more sellers. And then ultimately, because of this right here, ends up coming for this. Okay, so you get that buildup, which is right here. And then after comes and takes out the low, inducing sellers in the market. And then below that, you also got your little liquidity block. Now, there's a couple of ways you can enter the market. Honestly, taking out the low, enter right there, below here. That's one way. Another way, well, to be honest, the only way I would recommend it is taking out the low. If there was an imbalance, maybe fill of the imbalance or halfway or whatever, right? At the end of the day, I don't really look to have the best intricate entry because as soon as it takes out the low, right? The market took out that liquidity, so it can ultimately just move to the upside right away. So, taking this trade, honestly, if you want to be on the riskier side, you can put your stops below this low right here. If you want to leave a little bit more breathing room, you also got another little miniature liquidity block right there, right? You got one there as well. And yeah, pretty much. If you want to leave a little bit breathing room, you can. If you don't want to leave breathing room and just want to take it like that, it's completely up to you. If I was taking this, honestly, I would leave a little bit breathing room, just in case it wants to take out the low. But yeah, regardless, this is a quick in and out type of move. Target wise, you would be targeting highs, right? So let's go like this. Or even at least take some partials above here. And then, yeah, the rest to the highs. All right, so in terms of targets, I already mentioned you can take some off right here if you want, right? You still get a nice 1 to 4 to the structural high. Maybe take out just enough for your risk. And then hold the rest It's either here or take some partials there and hold the rest to your ultimate target. All right. And then yeah, quick little in and out type of move. That was on Tuesday. Wednesday takes out the highs, I believe, to the left as well. Yeah, so Wednesday takes out the high, and then it has this huge move down, right? Taking out the lows. Now, on Wednesday, it has a bunch of liquidity right here. So looking for longs is definitely a something you could do, right? Unfortunately, it took out the high from the left right there. And honestly, I wouldn't be anticipating longs after highs. I would have to see more price action and wait for what the market ends up doing. But yeah, nonetheless, even though it took out these highs left, you can see the market ends up moving to the upside, and which kind of gives me that, I'd say, idea that price might want to come for these highs next. But before coming for those highs, I believe these are ultimate highs. Yeah, all-time highs. But regardless, before coming for those highs, we can see a move down, taking out sellers, right? I mean buyers, and inducing sellers before we have that move up. But yeah, regardless, what ends up happening Wednesday? Oh, Wednesday was a sell-off. My apologies. It's a whole new day. But yeah, Wednesday comes into the takes out the highs and then does this. See, this I don't really mind, unfortunately, because it's so close to dead hour. I wouldn't really like it. Where did I go? Right there. Okay. So, you can see the market moves to the downside. And then you get that little sweep right there. Now, honestly, I would not want to enter here. Only because, I mean, you do have this little buildup right there, but I don't really like it for me to enter. You can argue you got that little sweep down here, that right there. On the 1 minute time frame, I believe it's pretty significant. And not really. Yeah. Okay. So, anyways, regardless, what ends up happening is market takes off these lows right here, right? And that's the reason why I would not like price. I mean, I would not like to enter here. But regardless, what ends up happening is the market takes this out, builds that liquidity block, and then you can see price inches lower, right? Look at that twice. Builds that liquidity right here. And that is an entry I would like to take. But as I mentioned, being so close, actually is at 1050. So it's not bad. But yeah, regardless, you can see market comes, respects this whole area, right? You can also see it even take out the low right there. Take this off. But yeah, you can see it doesn't even take out the low, right? Respects it, moves to the upside, takes out that liquidity, induces buyers, and then finally, you get your entry, right? But remember, you got your liquidity below here. Okay, so honestly, I don't mind this. Now there's a couple ways you could have taken it. You got your 1 second. That right there. Liquidity block. Entry number one would be here. And then you got your same thing, right? Boom, boom. Entry number two, a little more intricate. And then same thing again. But that buildup of liquidity right here. Enter there. Liquidity block above. And then, yeah, pretty much. This one, though, is very late. It's at like 1 p.m. EST. So I wouldn't be looking at anything at that time. But this one, honestly, this one is probably the best entry. My personal opinion. And then you got this one as well, which isn't bad. I just don't like the timing. It's at 11:35. Pretty late in the day, right? You do get a very small stop loss though. So this low, nice at 1 to 9. Regardless, if you were trying to be the safest bet is entering right there. You got your liquidity block above. Timing wise, 1050, not too bad. And then yeah, pretty much, right? Entry right there. An entry would be there because of this. That right there. Okay. Oh, they were ultimately induced from this whole area. So all you do is wait for the high to get swept. That's your entry. And then straight to the lows, still get a nice 1 to 8. Take some partials there, and then maybe hold to the next low. And reason you would be holding to that low is because of this. Look at that. BOS to the upside comes and respects the low. There you go. So you got that structural liquidity to target, right? Simple stuff. And then, yeah, that's on Wednesday. Thursday, I don't see any entries. They just respect the structure going higher. And yeah, pretty much. Honestly, no clean entries. Other than this, unfortunately though, um, I don't know. Sellers got trapped here. If it was gonna short, it was gonna short from here. But yeah, regardless, I don't really like the longs here. Not bad though. You got your look. US to upside comes. See that little build up. finally takes out the lows. You got your little miniature liquidity block right here on the 5-minute time frame. And then stop loss and targeting highs, right? Just to that structural high. I believe it's a let's say you took it after it took out the lows. And then let's say to that structural high. And where is this? Yeah, honestly, not bad. Still get a nice 1 to 3 from that move. Oh, timing wise sucks ass. Yeah, I didn't take in timing. But yeah, all of New York, you get that move up. Honestly, I would not be entering this at all. Not only do I not like it, yeah, not only do I not like it, timing wise, it sucks. It's literally at 3 p.m. Eastern Standard Time, which is very close to dead hour. So I would not be entering anything at that time. But yeah. And then um yeah, pretty much Friday just consolidated, to be honest. It's at the highs, so you kind of have to wait. Yeah, you kind of have to wait for more price action to develop. It's already taken out all the liquidity it needed to take out, right? All this right here. So you can possibly see a move down, right, into these areas. Maybe even take out the low. We'll see. But currently, I don't see it coming for the highs right away because there's really no liquidity there yet, right? Now that it's respected it, it's building that liquidity. Taking on these lows builds that liquidity above. So yeah, pretty much. Um, I just need more price action on gold to determine the bias. Any questions, guys? Any questions? Let me know. Let me know. All right. So that was gold. Entire week's price action. Let's go down to euro. All right, so let's see euro for a second. Okay, so euro. There you go. All right, so um on euro on Monday. Monday. Oh, I might have went too far. That's crazy. I went an entire week. I am tripping. Okay, that's the Friday, Thursday. Yeah, there you go. All right, so let's go to higher time frames. All right, look at that. Very, very clean stuff from Euro. Higher time frame wise. You can see right. You got that build up. Range ends up taking out the lows. Moves the highs. Takes this. Traps, sellers. And then finally moves to the downside. Now there's liquidity above here. And then finally it takes out the lows. Okay. So let's look at H4. All right. So what you end up seeing on Euro is move higher, it comes, takes up the lows, right? Builds that liquidity. You got liquidity above here. And then so I'm at 15. Okay. So all right, so what you end up seeing is in the previous week, right? Euro takes up the lows, induces sellers, comes, reacts from here, right? And then comes right here, takes all these highs, and then basically just has to build that liquidity, which it ends up doing right there. Takes out the lows, right? You got your liquidity block right here. I believe this is Sunday. So yeah. This ends up happening on Sunday. Nevertheless, you can see pretty simple stuff. Boom. Just as buyers, traps them, liquidity block below, and then moves to the upside. Okay. Anyways, you can see comes here. You got your liquidity block right there. Boom. Respects the highs. Look at that. Respects the highs. And mind you, this is based off the 15-minute time frame. So honestly, easy stuff right here. Boom, boom. Takes out the lows. Liquidity block below. And then, yeah, you got your entry. There you go. You can even be intricate and mark it out like this. Sorry, 1 second. There you go. Be more intricate with it. Mark it out like that. But nonetheless, You can see simple stuff really, right? The market's inching to the highs, okay, coming in here into that POI. And then comes, look at this, BOS to the downside or change of character, whatever you want to call it. Okay. Right here, actually. You got your BOS, change of character, whatever. Market comes, respects the high, induces more sellers, right? And then look at that, comes sweeps this. Now let's say traders said, okay, this isn't a significant liquidity grab for me. I mean, this isn't significant BOS or change of character for me, right? They ultimately wait for this. Market comes for that low and then shoots to the upside. I know this is probably news, so I wouldn't recommend taking a trade here. But liquidity wise, it does make a lot of sense. But yeah, nice to see. Nice to see. Pretty sure this is news. All right, so what ends up happening is on Tuesday, you can see that right there. Boom. Traps. Buyers. Comes here. Goes lower. Takes out the lows. Now, I remember seeing this. I believe I was doing a live call on this day. Yeah, I was. Um, oh, I remember this. Okay. This was bank holiday, but I believe this happened because Trump went into, claimed presidency. So yeah, anyways, regardless, what ends up happening is market sweeps the lows, goes for that high, for the low. Now, I didn't really like this because of this. Honestly, it makes sense liquidity wise. Unfortunately, there's nothing from the left for me to determine. Like, it's it came here, the market came here, took out this low, okay? Came for the high, took out the low again. All right. But like there's nothing to see where traders were originally induced from, right? Because I like to see an area where traders are induced from. And then finally that sweep and then the move up, right? Because I didn't have that, I didn't like this. A lower time frame wise does look quite nice. You can see, boom, right there. You got your liquidity block. Look at that. Lower time frame wise, quite nice. Takes up the high. After taking out the high, comes and takes out the lows. All right, look at that. So yeah, lower time frame wise, beautiful. Unfortunately, there was nothing from the left for me to like this trade. And that's why on the live call, I talked about this. And yeah, I didn't want to take anything on Euro. Anyhow, Let's see. Okay, yeah. So because this is a liquidity block, boom, right? Nice reactions to the downside, boom, traps, buyers, comes to the extreme, and then moves higher. But yeah, regardless, look at that, right? This is where traders are induced. Let's see. This was Wednesday. Let me see something. Yeah, unfortunately, on Wednesday, probably would have wanted something like this. Respects the high, comes, maybe takes out the slow, goes higher, builds that liquidity block, boom, and moves to the downside. I would have liked that. Fortunately, that's not what happened. But yeah, nonetheless, I don't know if I would have honestly taken an extreme entry because it's engineered liquidity short, right? It does make sense though. You got your liquidity block above, little entry right here at the extreme, just towards this low. But yeah, pretty much, I just wouldn't like it because I don't like taking too many engineered liquidity shorts. But yeah, nonetheless, there was an entry here. So, liquidity block, market comes, sweeps this high, beats another liquidity block. Look at this. Boom. Traps sellers into that liquidity block. There you go. Right into that liquidity block. Market comes lower. Engineers liquidity below here. Simple stuff, really. And then you got the market coming back into this liquidity block. And then finally moving to the downside, taking out the area that buyers were originally induced from. And then finally, the move up happens. Yeah. Let's see. Okay. Takes out the low. Yeah, I believe it took out the high right here. Yeah, it did. Yeah, for that reason, I wouldn't really like this move. It did play out because it's a liquidity block. Took out the, even though it took out the high, came into that liquidity block, tapped into it, and then moved away. Unfortunately, I don't like taking these type of trades because it's with structure, right? Just lower probability, honestly. But nonetheless, it does make sense liquidity wise. Sweeps that liquidity, was higher, doesn't really take anything from the left, comes into that liquidity block, and then moves away. So it makes sense liquidity wise. Unfortunately, I just don't like it because I am allergic to trading with structure. But yeah, regardless, not bad. Okay. Um, damn. And this move happens during Asia. Look at that. That move ends up happening during Asia. Um, so unless you're an Asia trader, would have missed out on that. I believe that was Thursday. There you go. That was on Thursday. Friday didn't really do much. You can see just respects structure. There you go. And then boom. So yeah. Any questions? Any questions? Let me know if you have any questions for Euro. If you don't, I will go over Nas and then probably I'll go over the trade I took on Nas on Tuesday. For those who missed the live call, I'll explain the trade here. Yeah, any questions for Euro? Going once, going twice. All right. No questions. I will move on. All right. All right. So, oh, damn. As you can see, swept the lows. Okay. So, sweeping the lows induces sellers. And then you got that. Right. Simple stuff, really. Right. Same thing over and over again. You got sellers induced at the lows right here. Well, to be honest, think of it this way. Market comes into this area, takes out the low, respected that. So these order flow traders would want to be looking for shorts. You're thinking the market's gonna come lower forever and ever and ever. But yeah, market ends up respecting all this. I mean, this whole area comes, sweeps it. After sweeping that, starts moving to the upside. So automatically, I would want price above here, right? Bare minimum above here, right? But because the traders were actually induced from there, I would want get above here, right? And yeah, pretty much. Um, yeah. God. This is Monday right here. What you end up seeing on Monday is pretty simple stuff. There you go. You get that high, that low. The price ultimately takes out the high, right? Inducing buyers. Price ends up coming into that POI, right? That I mentioned for those order flow traders. Okay. Comes into that POI for those order flow traders and then moves to the downside, taking out the lows. Okay. Taking out this low, inducing sellers. All right. So these order flow traders are now very trigger happy. They want to sell. They got their little confirmation and whatnot. So the market comes here. Look at that little slowdown of price. You can see market even comes here. Finally comes to the high. And there you go. You get that sell-off, right? And ultimately comes for that. Okay. Honestly, pretty simple. I talked about it on the live call. You got the market coming, taking out these lows, right? After tapping into that POI. So just think of it smart money wise. You got those order flow traders looking to enter here, looking to enter here, right? And all they're waiting is for a pullback and they want to enter for shorts. So market comes into that POI, okay, takes off the low, induces sellers, right? So now they got their confirmation, right? They got their confirmation for sells, and then all they're waiting for is a pullback into their order block or whatever. Let's say some of them want another confirmation. What they're waiting for is that pullback. They're waiting for the sweep of the low, right? You can even see this. Boom. Oh, sorry. Right there. Takes out the high. Use this. Takes out the high. Then comes, sweeps the lows, right? Inducing sellers. And then finally coming for that low to the left. Right here. And yeah, pretty much. On the 1 minute time frame, you can see a liquidity block right below, which is right here. You got this right here. Boom, US to the upside, inducing buyers, and then coming for the lows, right? Little miniature liquidity block. And then yeah, honestly, entry number one could have been right here. Give me your stops below the low. And then targeting the highs, right? Taking out some partials right here. Even to the structural high, honestly, you got a nice 1 to 5, right? And then you can hold the rest towards that higher time frame target. Or maybe take out some partials right here as well, right? That liquidity over here. And then finally holding the rest to your higher time frame targets. Simple stuff, really. I did take a little cheeky entry over here as well. I'll go over it on the 1 minute time frame. Yeah, I talked to put on the live call, to be honest. Okay, so um the market comes to this low, respects that liquidity block from the left. And then yeah, I kind of sneaked the entry right there, somewhere here. Or I think it was a bit higher, like around this area. But nonetheless, um market comes higher, takes out these highs. Okay. Now, because it took out these highs, I'm not really too interested. Okay. I'm not too interested in taking longs yet. Now, what ends up happening is the market, even though it takes out the high, look how it comes here, respects this. Okay. Respects that whole area. Just mark it out. Second. There you go. Delete that. All right. So after taking out the highs, look how the market respects this area right here, moves higher, taking out these highs again. I'm going to take out these highs, right? Inducing buyers. And look at that. Buyers get induced. You can even see comes into this area, has a pullback, builds that liquidity. Okay. Moves lower, traps the buyers in the market. Okay. Now the market trapped buyers. Look at this right here. Buyers get trapped. Market moves to the upside. Look how it printed this high right here, printed this low right here, and then moves to the upside. So you can possibly say BOS, right? Second. There you go. Boom. Right? Comes into these highs, respects the high, comes lower, and you get your trap, liquidity block right here. So yeah, I sneaked an entry right here. I believe it was right there. Stop loss below. Yeah, pretty much. Pretty much. And then to the structural highs, you get a nice 1 to 10. And then targeting these highs. One second. All right. And then finally targeting these highs, you get a nice 1 to 15. And then up to 26. But yeah, obviously, you should be taking partials at that structural high, even maybe above here. Some partials there. A little bit more here, maybe. A little bit more there. And then hold to your ultimate targets. Yeah, regardless, nice little entry on Nas early in the week. And then you can see obviously on Wednesday, nothing really. And then yeah, I don't really see anything too clean. Interesting. So after taking out the highs,